Oh man, I think I have some problems with my camera here. I hope not. Let's see. Uh, testing, testing. What has happened to my camera? Oh man, I think I have some problems with my camera here. All right, let's see if we can fix this. Shucks. Come on, what's going on here? There we go. Okay. All right, there we go. I was wondering why the camera was not working. So hopefully this is working. So let's see. Hopefully this is working. Man, I swear. Touch one different button and the whole thing just comes crashing down. Okay, so today's topic is going to be, does dividend investing still make sense, right? And here are just I'm just going to go through these different segments, and if you guys feel, put down below any questions you guys might have. But I'm just going to basically go through these segments that I have that are already kind of pre-listed. So does dividend investing make sense, right? Uh, First, for those who don't know, what is dividend investing? So quickly rolled up, dividend investing is basically investing into companies, and these companies or ETFs, they pay you a dividend, right? So typically you'll see things like yield, a dividend yield, which is, like 2%, 3%, 4%, 5%. That's basically, if you were to put $100 in, you can expect, a dollar, in return annualized. So it's an annualized return for the dividend yield. For companies, it's basically money that they're paying their shareholders for their investment. Okay, so you'll have companies that give you, like a 3% yield, dividend yield, and that's basically, if you were to put in a hypothetical $1,000, or even let's go with $10,000. If you were to put a hypothetical $10,000 off that 3% yield, you're looking at $30 a year, right? Doesn't sound extravagant, especially when they pay monthly or if they pay quarterly, but that's the start of what's known as the snowball effect, right? You reinvest your money back into the portfolio. So, the beauty of dividends is that it is a pure form of passive income. Okay, it is really a pure form of passive income, because when you invest into these dividend paying companies or dividend paying ETFs, you're going to get a return. You're going to get a dividend yield. And you're not working for this, right? I covered in my last live that basically there's two types of income. There's active income, and then there's, passive income. Passive income is money you're not working for, money you're not actively trading time for. Whereas, active income, you're actively working for that money. Now, is there some upfront, work that has to be done when you invest into these dividend paying stocks or ETFs? Yeah, of course. You're going to have to, basically do the research, learn a little bit about the ETF, learn about the company, and analyze it before you make your investment. And that could be time consuming. That could be, a couple of hours. That could even be, depending on how you feel about it, could be about a week's worth of research, right? If you don't know what you're doing and you're trying to learn. So, that is kind of the upfront work that you'll have to do. But once you invest into it, and then, you're just kind of collecting dividends after that point. You might have to check on it probably once a month, maybe quarterly. You should definitely check on it at least every year, right? Definitely check on the companies you're investing into every year, if not quarterly, if not monthly. Okay. And there's different types of investments out there, right? You have individual stocks that will pay you dividend yields, and these individual stocks are companies think of like Johnson and Johnson. There's 3M, there's Nike, Apple even pays out a dividend yield, and then you have even Meta. I think Facebook even pays out dividend yields, but you have all these different types of companies, right? That all pay dividend yields. Not every company pays dividend yields. Typically, like the technology stocks, the high flying technology stocks, they don't really pay a dividend. And if they do, it's really really low. So I wouldn't really count on it, because the reason is these technology stocks, what they're doing is they're reinvesting the money back into the company for research, development, things like that. Whereas there's companies like retail companies or companies that make products, right? And these companies, they pay their shareholders out in the form of a dividend, right? They'll pay a dividend. Sorry, it's getting a little warm up in here. Yeah, so they'll pay a dividend. Then you have like REITs, real estate investment trusts, and these companies, they make money off rents, right? They make money off leasing spaces to other companies or tenants, and what they do is they pay out a dividend yield, from the cash collected, right, from the rents that the tenants have paid. So that's basically what dividend investing is at a very high level. I mean, there's a lot more, of course, but that's basically what dividend investing is at a high level. So what are pretty much the pros of dividend investing, right? So you're going to get stability and income. That's really why people invest into dividend paying companies. They're going to get that stability. They're going to get that income. A lot of people will kind of say, for younger people to invest in growth. But I think there's this like movement now, especially with YouTube, being so prevalent in everybody's everyday life. People are seeing how normal everyday people are building, huge streams of passive income through dividend investing. Things like $10,000, $15,000, $20,000, even $25,000, through dividends. That could be supplemental income. That could be money used for a very nice vacation. That could help pay off some bills. That could help finance, something, right? Or you can just throw that money into another investment, right? Dividend investing typically gives you stability and predictability, but there's so many different types of dividend instruments out there, dividend investments out there. You have REITs that pay quarterly, some pay monthly. You have stocks that pay sometimes monthly, sometimes quarterly. You have ETFs that are really making waves out there. They're paying not only quarterly, but they're paying monthly and they're paying weekly, right? There's some ETFs out there that will pay you weekly. All right. And these are very popular, cover call ETFs. If you don't know what a cover call ETF, don't worry about it. It's kind of outside of the scope of today's topic. But the beauty of getting paid so much different like dividend income is that you can compound your wealth much quicker. So a lot of people, what they would do is that they're gonna opt for the higher income, the higher dividend paying ETFs and things like that, so they can invest and reinvest into their portfolio to compound their wealth much quicker. So this is known as like the dividend snowball effect, right? Whereas you're basically taking the money and buying more investments, which pay out more money. So it's money paying you money, right? It's money buying more money, which buys you more money. Sorry, I need my coffee. It's early in the morning over here. So, anyways, that is compounding, right? That's one of the pros of dividend investing is you're going to get that compounding effect. Some real life kind of examples of this with companies that have paid huge amounts of dividends over time. You have, and I'm going to use Realty Income. I just did a video on them. They're a dividend aristocrat, if I'm not mistaken. So they've had consecutive payouts every month for like 366 months, and they've been paying out for what seems like a couple decades now. So they've never missed a payment. They've paid monthly, and their dividend has also been increasing over time. So, you have companies like this that exist out there that have paid, without fail every single quarter, every single 3 months, every single month, and they just keep paying out. And this is kind of the beauty of investing in really good companies, really good dividend paying companies. Now, the same could be said with investing into ETFs, dividend paying ETFs. You have something like SCHD, the Charles Schwab dividend ETF, and that's more or less probably one of the safer kind of ETFs out there. It's kind of like the vanilla one. Everyone just chooses that one. But yeah, you can go with something like SCHD that just goes over, or that just invests in basically what's called blue chip stocks, and it's a basket of them. I think it's like 100 and something. And this ETF, when you invest into it, pays you out a dividend of, I think, about 3.5 to 4%, right? It's not going to grow fast like tech stocks or even like tech focused ETFs, but it will grow and it will pay out a nice dividend. So on a hypothetical $100,000 investment, into something like SCHD, you're going to get growth, plus you're going to get a dividend yield. And that dividend yield is about 3.4% to 4%. So that's like about $4,000, right? $3,400 to $4,000. So what's up, Mike? What's going on, brother? How you doing? Hey, is my camera a little dark? I had some feedback that my camera is a little dark, or maybe it's the background's too dark. Is the background too dark? Do you guys, can someone say yes, no? So yeah, today's topic is dividend investing really worth it anymore? And I'm basically going over kind of the pros of dividend investing, the cons, kind of the history, or not the history, but what is dividend investing? Because there's a lot of people who have an idea of what it is, but they don't really know what it is. And then kind of go over who it's for, and does it make sense? All right, all right, appreciate it, Eugene. Awesome. Yeah, I don't know. I had some feedback that it was that the background was too dark, or that this whole video was too dark. But before I continue, so I just covered, what is dividend investing, and then the pros of dividend investing, and then the downsides of dividend investing. Or I'm going to cover the downsides, but what do you guys think so far? As do you have any questions? Do you have any questions up until now? Oh, that's probably true. Yeah, I got you. I got you, Mike. Yeah, I need to do something about putting a light behind me. Yeah, I got like a little bit of a light, but obviously not good enough, not bright enough. Yeah, so what I'm gonna do for now, for these lives, is I'm gonna have like a broad topic, and then just kind of segment them out, and then go over each of the talking points, and then give you guys a chance to either put in some input, some feedback. Maybe you guys got some questions. These streams are gonna be about, I'm hoping for an hour long, but I don't know. Depends on how well I can think, because right now it's like seven in the morning for me. So I'm trying to catch up on my coffee here. All right, cool. Let's see. It is a bit cold these past few days. 3 inches of snow on the ground, and it's really windy out there, dude. I saw I have a friend who lives in Texas, in Houston, and it was like completely covered in snow. At least I think he's in Houston. I don't know if he is or isn't, but he lives in Houston, and he took a video, and I was like, holy crap. I mean, I'm from Mass, or I used to be from Mass now. But yeah, I lived in the Northeast, and yeah, it was pretty damn cold up there. Yeah, it gets really cold, really icy. Yeah, it ain't good. But all right, cool, man. All right, well, I guess we'll continue unless anyone has questions. Right now we have just only a couple people in the chat. All right, cool. So let's talk about the downsides of dividend investing. All right, because there are downsides. Dividend investing is not exactly the end all be all. Um, so here's and this gets a little technical, so don't lose your head on this. But there are companies out there that have super high payout ratios, right? And basically, what these payout ratios are is the company it's basically expressed as a percentage of what they're paying out, uh, right? And when it's too high, like between 80, well, really it's between 80 and like 100% payout ratio. Some of them go as high as 115. When it gets up that high, like those are unsustainable. Like that, those companies are super unsustainable. I typically try to aim for between 60 and 80%, to be honest, probably as high as 85%. But anything over that, and you're really running the risk of investing in companies that will not only cut their dividends or halt their dividends or even suspend their dividends completely. Uh, so you got to be careful with companies that you're investing into, especially when the payout ratios are high. It is a risk, and it's a risk I think a lot of investors don't really, take into account. Now, when you're investing in ETFs, the payout ratio, in my opinion, doesn't really matter because you have a basket of, it could be a basket of, 1,500 companies, or not even 15, probably a basket of 100. I've seen baskets of like 25 ETFs with 25 holdings, ETFs with 100, 125. There's ETFs out there, income ETFs for bonds that have like 14,000 different holdings. So, again, if one of those holdings goes bad, it's not going to topple the whole house of cards, right? It's not going to topple anything. It's not going to take down the whole house. So that is why I kind of always opt for people, including myself. Well, I used to, but including myself, I used to opt more for ETFs that pay dividends versus investing in single companies. Because when you invest in single companies, you really got to keep an eye on a lot of stuff, right? And the payout ratio is definitely one of those items. Um, so another problem with investing in dividend paying companies is the total lack of diversification, right? We always say in the finance space, in the investing space, that diversification is, the only free lunch when you invest, right? You can have a little bit of crypto, you can have a little bit of, S&P 500 or a little bit of stocks, right? You can have some individual stocks, you can have some REITs, you can have some gold, you can have some whatever, right? You can have a little bit of everything. That is true diversification. But there are investors out there who, and I'm not knocking them. Of course, everyone's different. No size fits all. But there are some investors who are concentrated in like three stocks only, right? They only have three stocks. And obviously, if one of them performs really badly, that could be 33% of their whole portfolio. So diversification is always a good thing. The beauty of ETFs is that they usually hold several different companies or several different holdings or several different security types, right? I've even seen ETFs that hold other ETFs. There's an ETF out there. It holds like a basket of like 20 different ETFs, which I think is kind of stupid because you're going to get expense ratioed to death. But you're gonna get feed to death, I suppose. But yeah, there's ETFs out there that hold a basket of ETFs, which is kind of ridiculous. But yeah, you don't want to be too concentrated, in my opinion. You don't want to be overly concentrated in just like two or three dividend stocks. Definitely want to have some diversification in there. You definitely want to mix it up a bit. Include some ETFs, some broad market ETFs to protect yourself, right? Because when we talk about risk, we're talking about not only the loss of money, but we're also talking about, downside risk, right? That's what we're really talking about too. And that's more technical than anything. But when you're talking about risk, you're talking about how much money are you willing to lose, and you're talking about some downside risk. Because if you have just three companies and one of them goes completely bad, goes down in value, and the company's like on a track heading towards bankruptcy or something, you just lost 33% of your portfolio, right? But if you have an ETF in there that holds a basket of 500 companies or 4,000 companies, if one company goes bad, it's not going to take the whole thing down, right? So just something to think about. That is one of the bigger downsides of investing in dividend stocks is you're being way too concentrated in a single holding, right? In like one holding. And dividend yields can also be very misleading. You don't want to rely on dividend yield like alone, because you also want to take into account dividend history, payout history, and see if they've actually been paying out like they say they have. Right? I've seen some that have like a 92% dividend yield, but then you look at their payout history and they only paid out once like 4 years ago. Right? They've only paid out maybe twice in a year when they say that they're paying out quarterly or monthly. Right? So you got to really like look at that stuff. You can't just take what you see or what other YouTubers are saying about some certain stocks or ETFs or even different funds. You have to really do a little bit of your own research. So yeah, that's pretty much it. All right, Galveston, you're okay. South of Houston. Okay, yeah. So then, I guess my friend was right. Yeah. So, man, that's crazy. Yeah, I don't miss snow, man. I tell you, I don't miss snow. Right now, outside it's like super sunny, so this is why I got the blinds closed. If I open the blinds, my camera is just gonna be completely white out. So, but that's pretty cool. Yeah. So, any questions so far? I see we had one new person that joined the lives. Any questions about dividend investing? Yeah, one thing I definitely am gonna talk about here in a second is, does it even make sense anymore now that there's basically tech stocks out there, right? You have tech ETFs that have just blown away the market, like just completely blown away the market. But you also have dividend paying ETFs that pay out a lot of money, but does it make sense? Some of these growth ETFs are ridiculous, and they're paying it, like not paying out, but they're growing 45% a year. Like, it's ridiculous. If you put in for every $100 you put in, you would have got $45 back. Oh, station Portland, Maine, and later Newport, Rhode Island. Yeah, that's crazy, man. Were you were you Navy? Because I know there's that big naval base in Newport, Rhode Island. So Eugene for Harmony asks, one question is, what is your favorite ETF or ETFs for stocks for dividends? The ones which do not fluctuate a lot in price value. So I covered one of them. SCHD is I don't invest in SCHD, full disclosure, but I know that it's probably one of the safer bets out there. There's no shortage of content on SCHD, and that's from Charles Schwab. So it's a pretty decent ETF. It's not bad. Are there better ETFs out there? Probably. I would say there's probably some better ETFs out there, but SCHD is definitely one that I think is like, it has like a cult following. A lot of people like SCHD, so that ETF pays quarterly, and it's got like a really really good track record. Dude, Gal, really? You're Coast Guard? Oh, wow, that's crazy, man. Yeah, I'm prior Coast Guard myself. Yeah, I was at in Boston. I mean, I was a reservist. Don't get me wrong. I didn't do anything like super sexy. I did have like a special, well, if you want to call it a deployment to Afghanistan and Kuwait. So, yeah, that's pretty cool, man. Damn. Like it's so crazy. Coast Guardsmen are like, they're like unicorns, man. You just can't, you don't ever find them anywhere. So that's pretty cool. That is pretty cool. Yeah. So, oh, Gunner's Mate. All right. Yeah, I was one of the newer ratings. I think they just uh I was a port security specialist for like a month, and then they changed it to the newer rating, which is maritime enforcement. And then so I was doing ME stuff for a little while. And then even though I never did my job, like I was always triple hatted doing other crap. So but that is cool. That is cool. But yeah, Eugene, I hope that answers that question as best as I can. I hope that makes sense. But yeah, for stocks, for individual stocks, I mean, I invest in REITs. Personally, I invest in REITs. I'm not going to say which ones are better or which ones are the best ones. Um, but, you know, if you look at some of my prior videos, you can see the ones that I'm investing in. Yeah, as far as like, again, the best stock to invest for dividends, it's kind of a hard, that's really a hard question. Because I don't want to seem like I'm endorsing a stock or I'm endorsing a company. But you could look for like dividend aristocrats or dividend kings or dividend blue chip companies. I would start somewhere there. All right, cool. All right, so we're going to move on to the next segment of this live. And this is going to be, you know, does dividend investing actually make sense, right? So we got to talk about like age, right? This is the big one. Dividend investing traditionally has always been for like the older guys and gals, right? The people who are like in their wealth preservation stage of life. They've already made all their money. They probably have like maybe a couple million, maybe $1 million in their portfolio. And now that, you know, they're older, they need to rely on income, right? You're going to rely on Social Security. You're going to rely on dividend income. You're going to rely on maybe a pension or maybe some type of other retirement income, right? This is where a lot of investors will move their money into dividend paying companies and ETFs because it's going to give them predictable income, right? And it's not going to make them lose their money. Um, so that is typically the traditional advice that most people give. Uh, but you know, again, with YouTube being so prevalent and dividend investing really gaining in popularity, a lot of younger people are building their portfolios around dividend paying companies. And with, you know, cover call ETFs coming out that are like all the rage right now, that are paying out these really insane like dividend yields. You're talking like some as high as 98%, right? Some as high as 50%, some as high as 25%, and that's on a monthly and weekly basis. Like it's pretty crazy. But again, these come with risk. You know, there's no such thing as there's no such thing as other than there's no such thing other than diversification that is a free lunch when you invest. So these ETFs, you know, they come with their own risk, right? You have, you know, the cover call ETFs, you have the high paying dividend ETFs, you have all kinds of different ETFs out there, right? Preferred share ETFs, you have all types of stuff. Um, but yeah, you have to take all that into account. Like, is it going to hamper your portfolio? Like, will you still be able to grow it? Are you still looking for growth? You know, so this is where you have to get kind of into portfolio construction, and this has to align with your financial goals, right? I always harp on the financial goal piece because a lot of people don't even have financial goals. But you need to have financial goals. What are you actually trying to achieve, especially for the younger crowd? You know, the under 34 crowd, or you know, yeah, basically 18 to 34, the younger crowd. What are your financial goals? What are you actually trying to achieve? What are you trying to do? Because a lot of people are just throwing darts at a dartboard and then hoping something takes off, right? They're throwing money, a little bit of money at these crypto coins that they don't even know what they are. They just know that they're crypto coins, and crypto go boom, right? Crypto go moon, diamond hand, right? That's what they know, all right? And that's a terrible way of investing your money. Others will throw darts at stocks because they see YouTubers, Yahoo Finance, Seeking Alpha articles about it, and they just, yeah, this looks like a good one. It looks like it's been doing well, and then next thing you know, the company goes under, right? Or this is a generational wealth building stock, right? That some YouTubers push. that annoys me more than anything. But yeah, you'll have YouTubers out there that say, oh, this is a generational wealth stock. This thing is going to make you rich in 2025. And then it goes to zero, right? And then the stock ends up doing horrible. And then, their excuse is, oh, well, this is a long-term stock, right? Like, it's not going to recover and you probably lost all your money. So the thing is, you got to be really careful. You have to have some goals in place. Like, what are you actually trying to achieve? Are you trying to achieve passive income? How much passive income? A portfolio value? What's the portfolio value? What's your net worth? How much net worth are you trying to have? Like, these are all the types of questions that you need to have when you start deciding if you want to invest in dividends. Boom, there we go. The wise working man. Thank you for that. Cash flow is king. That's what we need, all right? Cash flow is king 100%. All right? So you also talk about your income needs, right? Again, when you're younger, you probably don't need as much income because you're working a job, right? But again, with the advent of YouTube and travel, and young people like basically quitting and moving abroad and traveling the world, that motivates people. That motivated me to basically concentrate on dividend investing, right? So, but it's a slow grind. It's a really slow grind to the top. To make a lot of money in dividend investing is a slow grind, right? Because one, you got to have money to invest into dividend paying stocks and ETFs. And then two, you got to be consistent with it. And then three, you got to hope that you don't, lose portfolio value. And then some people will even take higher risk by taking out margin, which is basically borrowed money, and then they invest that money into other things that probably can do bad, right? So it's not all doom and gloom. Depending on how you do it, it could be very advantageous. You could make a lot of money, but on the flip side, it could also be pretty bad. So it really all depends on you, right, and what you're doing and how you're deploying your money. So again, these are like factors you have to think about if dividend investing makes sense for you. Again, traditional advice will say, no, invest in growth, right? Invest in growth, invest in tech stocks, invest in broad market ETFs, and call it a day. S&P 500 and chill, right? S&P 500 and chill, right? I'm of the camp that, I want to be as aggressive as possible. Some, again, traditional advice is, include some international stocks and include some bonds. I don't want bonds, man. Like, I'm trying to grow my money as fast as possible, bro. Like, I want my money to go up, all right, and to the right. So, I have such a high time horizon that I could deal with a couple bumps in the road. I could deal with a couple of, March 2020, pandemics. I could probably deal with one or two more of those in my investing lifetime. Right. So I can deal with these because I'm still making money and I can put that money to work and then take advantage of cheaper shares. Right. So again, it all depends on you as the individual. It depends on people who are putting their money to work. So just something to think about. So you can also, and I already covered, the growth stocks, bonds, and real estate. Real estate is, I invest in REITs, but there's also rental property investing. There's real estate syndications. You can invest in real estate funds. I mean, you can do Airbnbs. You can do there's 100 ways to invest in real estate, right? And when we're talking about which is better, dividend investing or those other asset classes, I mean, again, it comes down to what do you want to deal with, because they all have their own unique risks, their own problems. And I mean, I've invested in rental properties, and I think I'm done with that. I'm so done with rental properties. Like, dealing with the tenants is, and I always say this on any video that I talk about. Like, I plan to do a video on, I guess, the pros of rental property investing, but yeah, it's just, I have such a sour spot for it. So I try not to talk about it as much. But anyways, so yeah, does it make sense for you? When should you start? That's the question I see, from time to time. And I got to say, again, it depends. It really all depends on you as the individual, because if you're a young person, and, you have a long time horizon, how much money are you making? Does it make sense to invest in dividends or dividend paying ETFs and stocks, right? It's going to be, like I said, it's going to be a slow climb. It's going to be a grind where, you might invest in dividend ETFs or stocks. They might return, total 5, 7, 10%, 12% for the year. But if you were to invest into something as simple as like an S&P 500 and it returns 25-30% for the year, I mean, you lost out on all that growth, right? You lost out on all, you left all that money on the table. So, again, it's just some things you got to think about. Oh, see, here we go, man. The wise working man says, single family rental investor here. I feel your pain. Man, brother, thank you so much. You know the deal, man. Damn, dude. I hate like dealing with rental property. Oh my God. I'm so glad I got out of it. But yeah, that's, when should you start dividend investing, and when would it be worth it? Again, strategy comes into play. Are you going to be doing high yield type of plays? Are you not? I know there's a couple of YouTubers out there that invest strictly in high yield investments. I don't know what their full portfolios look like for all of them, but sometimes they do say that they're doing well, the portfolio is doing well. It's still maintaining its money, the money that they invested, and they're still paying out high dividends. So I don't know. Like I really don't have that answer for you guys. But yeah, this is a quick opportunity. Let's see what we got in the comments. So let's see. Yeah, other than the wise working man last said single family rental investor here. So again, shout out to you, man. Definitely know what that pain feels like. Yeah, definitely know what that pain feels like. That is funny, man. Yeah, rental property investing. I'm so done with that stuff. I don't know. I mean, I still invest in rental properties, but I do it through syndication. So I'm investing in like big apartment building type of deals. I'm really trying to get my money into self storage because I think that's going to be excellent, like an excellent asset class going forward. But I don't know. We'll see. Yeah, so that's gonna be pretty much it for this these segments that I had. So just real quick as a summary, um, we covered what is dividend investing. We covered the pros and cons of dividend investing and if it makes sense for you, and then who should dividend investing actually be for. Um, and again, it all depends on who that person is, right? Like I know there's a lot of stuff out there that shows dividend investing as being like this uh, really super sexy, way of putting your money to work, especially when you're getting paid out like a couple $1,000s a month. But again, it's a grind. It's a huge grind. And how much patience do you have? You know, so yeah, we covered that, and we also covered if it makes actual sense for you, because it might not. And again, there's two stages in most investors' lives, right? There's the wealth preservation stage of life, which is much later. You're nearing retirement. You're just trying to make sure your money is preserved and that you can create some type of predictable income, right? And then there's the growth stage of the investor's life, where they're just putting as much money as possible to work to grow their money, right? That's pretty much the two stages of the investor's like life cycle. There's probably more, maybe there's degenerate gambling somewhere in there. I don't know. Yeah, probably degenerate gambling. I think would probably be a good, uh, probably be a good one. But yeah, stream's been going for about 40 minutes right now. Um, Covered a lot of stuff. I see people coming and going in the in the stream. So if there's anyone that has a question, I mean, please drop it in. Wise working, man. I don't know if you're still here, but where's your rental properties at? I wonder what the actual return is on degenerate gambling. I like that. probably between 0 and 1,000%. Oh man. So Eugene for Harmony asks, why do you like REITs so much? So I'm a real estate investor through and through. I know the power of compounding that real estate can provide, the long term wealth benefits of real estate, and I did a video on REITs versus the S&P 500 over long periods of time. And surprise, surprise, REITs have actually outperformed. Just to summarize that video for you. But REITs are a very old man's investment, right? Like my whole portfolio is designed for income. I still have, some S&P 500, a sizable position, but I also have investments into physical real estate. I don't know. Maybe if I started all over again and I didn't start with real estate, I would probably be tech heavy. Probably be more or less tech heavy more than anything. I'd probably have like a ton of VGT, QQQ, or something like that. So that I hope that answers that. Oh my God, yeah, Memphis, Dayton. Okay, yeah, I had property in Chicago, which was a total mistake. I had property in Louisiana. I had some in. I had one in uh, Columbus, I think Columbus, Ohio, and yeah, I sold pretty much all of them. I'm just holding on to the one until I can sell it later. Yeah, I had to consolidate myself. Yeah, I consolidated everything into the REIT portfolio. So Eugene says they didn't do well in 22 or 23, and they only recently started recovering. Well, see, here's the thing um, about 22 and 23. Like, what is well? Like, what didn't they do well? They, for the most part, they still paid out their dividend. Most investors just think of the share price, but these companies are excellent companies. Their balance sheets are excellent. They're not in like debt up to their eyeballs. They're not losing money, you know. And there's all those old adages out there, buy low, sell high. There's, the famous Warren Buffett quote, something about like you don't want to buy you don't want to buy a great company at a good price. You want to buy a great company at a great price, or something along those lines. So why wouldn't you want to buy REITs, right? Especially when they're down 20 to 30%, right? Or yeah, 20 to 30%. That means just on the recovery, you're going to get that 20 and 30% back, right? And then anything after that is complete gains, right? So that's just my high level thought about that. Because a lot of people are discounting REITs. They're saying, "Oh, REITs are trash. They're garbage. Why would you invest in them? They're dumb. They've been doing bad for 3 years. They're not going to go any higher." Like I get that, but people are they're short sightedness, right? That's short sightedness. Look at the long term. Look at the 5, 10, 15, 20 year like lens. That's what I always talk about, is having that long term lens, because that's the way I'm looking at real estate. Like, you need to have that kind of lens when you invest in a real estate. Man, it's good you didn't. The wise working man. It's good you did not buy in Chicago, because, man, dude, Chicago, like their tenant laws are so favorable to tenants. It's ridiculous. Like, I don't mean to make this political, but one of my teachers was like, or mentors, whatever you want to call them, was like, if you're going to buy real estate, look for it in red states, right? Just look for it in red states, where tenant laws are more favorable to the landlord. Because I went through an eviction that almost took a year and a half, right? Because the tenant was just playing so many games and the courts were just allowing it. So I got screwed for like a year and a half's worth of rent. And yeah, I will never invest money into blue states ever again. I don't care how good the deal might be. I don't care what the numbers might look like. Can you make money in blue states? Of course you can. But I'm just saying, for me as an overseas investor, as someone who's, not living in the United States, I will not invest in single family rentals ever again, like, unless I live in that city. I think if I lived in the city, it would be different, but I didn't. I was investing while I was basically from overseas. So yeah, that's that. Yeah. Yep. You got it, man. Like, you absolutely get it. Eugene, did that answer your question about, why I'm like why do I like REIT so much? And it's not that I don't own another, other stocks or whatever. Like I do own like a pretty sizable S&P 500 ETF. So that is like my, like I don't want to deal with single stocks. I'm not that smart, so I just invest in that broad market ETF and call it a day. S&P and chill. You don't invest where you live, yeah. Oh my god, yeah. Hell no. No, New York City. Oh my god. Man, I saw some really bad horror stories for real estate investors in New York City, man. I my heart goes out to them. They make it seem like all real estate investors are just a bunch of like millionaires who all get together at the convention and screw tenants over, man. But a lot of them are just mom and pops just trying to make ends meet, man. Just trying to build wealth, right? And they're all trying to get financially independent. But yeah, New York, hell no, man. Those squatter laws, oh my god. Someone just breaks into your apartment, or I saw where someone, they rented an Airbnb and then they didn't leave and they had like squatter protection. They had like tenant protection laws. They couldn't get kicked out. So they lived in this really nice luxurious Airbnb for like 6 to 8 months for free. They didn't have to pay a dime. And they were like right in the middle of Manhattan or something. It was ridiculous. I was like, holy hell. Like, nope, 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 no thank you. Man, yeah, dang. Yeah, I'm so glad I'm out. I'm out. I'm done with the rental property game. And now I'm in dividend paying like stocks, I guess. I even like kind of toyed with like putting some of my money into the yield max funds. And I'm going to cover yield max eventually. I just don't want to cover it now. I'm still doing a lot of like background research on things. And there's a good YouTuber out there. I'll put his uh thing in here. Whoops. Let me. Oh, that's hurting my eyes. Let's do this. There we go. Um, pay me in dividends. Yeah, so that's his handle on YouTube. But he covers a lot of like yield max stuff, and I would recommend people follow that guy. Like he does solid videos. Actually, I talk to him from time to time, and yeah, the way he looks at him is pretty intelligent in my opinion. I always give him a shout out whenever I think of yield max, because like out of all the videos I've seen, his probably make the most sense, and the way he goes about it makes the most sense. Because again, there's too many investors out there that are just like, oh my god, yield is like a lot of money, and I'm making so much money, and it's not really good. So Eugene for Harmony says it answers. So I'm glad that answered that, man. That's awesome. We have VNQ, which is a Vanguard real estate index ETF. We have VNQ in a 401k, but I did not put it in yet. From another hand, I saw some states or some stats that REITs based on residential REITs are not doing so bad. So maybe, yeah, maybe one on the residential ETF. Yeah. So, the I love reading articles that say the commercial real estate market is going to implode or explode or blow up or fail or crash. Uh, or the real estate in general is going to blow up. No, it's not. All right. There are like 10 different sectors in real estate. Okay. You have cell towers, you have data centers, you have residential homes, you have multifamily apartment complexes, you have mobile home park communities, you have triple net lease, you have cannabis REITs, you have gaming and leisure casino REITs, you have billboard REITs, you have farmland REIT. Like, what sector are we talking about here, right? Now, I agree that the office REITs are definitely something I'm staying away from, right? Office REITs are things I'm staying away from right now. Mall REITs, I am staying away from them because, they're bad. Like, everyone's moving to e-commerce pretty soon in America. Like, everyone's just going to be buying stuff off e-commerce, Amazon, etc. Right? I don't see. I don't know. Maybe it's a very pessimistic, bearish kind of way of looking at it. But I don't see people going to malls as much in the United States. Out here in Thailand, the malls are always packed. When I was in the Middle East, the malls are always packed. Like they're always jam packed because I don't know. That's where the families go, right? Like, but yeah, in America, I don't know. I just don't see it like it used to be. I could be completely wrong, but I just don't see it. Um, but those are two real estate sectors I would stay away from, right? Like those are definitely having problems. But then you have something like because the incoming or incoming the president now, President Trump, right? I know he was inaugurated yesterday, if I'm not mistaken, or 2 days ago. But President Trump, he has some possible inflation causing, policies that he wants to enact. And this is going to put pressure on, logistics REITs that own huge warehouses, that lease things out to like Amazon and other REITs that list out or lease out their properties to things like Dollar General, Dollar Tree. I just did a video on that too, where they import a lot of their stuff from China, right? And if these imports start to cost more, then the distributors are probably going to buy less, right? And less stuff they buy means less space that they need. So yeah, REITs, that own warehouses are probably going to be affected in that regard, right? So those are the things you have to kind of look at. But multifamily, they're doing exceptionally well, right? Residential properties doing exceptionally well. Rents are actually increasing in most areas. The price of housing is increasing. There's actually a housing shortage right now in America. And I'm of the camp that America is going to basically be a renter's nation, right? It's going to be a renter's nation because the cost of housing is so much. You're going to need to make a lot more money in order to buy a house going forward. I don't know what the answer is to bring the housing costs down. I don't have an answer. I'm not that intelligent. I'm not a macroeconomist, but I will say that, hey, as an investor, I'm going to take advantage of that. I'm going to take advantage of, the shortage of housing. So I'm going to invest in multifamily and residential, right? Residential REITs, residential properties, whatever the case may be. So I hope that answers that as well as it could. We got any other questions? I see we got 6 people. We're coming on minute 53 of this stream. We have any other questions? So we covered dividend, if dividend investing is worthwhile. And again, in my thought, I hate to be that guy, but the answer is it kind of all depends on you as the investor. It kind of all depends on, does it make sense for you, right? Are you in your wealth growth phase of life, or are you in your wealth preservation stage of life, right? Do you want to do, the grind of making, a lot of money in dividend income, where you have to sink a ton of money into it, or do you want to take a little more higher risk? You want to take margin? There's all these other factors that come into it. Oh, appreciate that, Eugene. Yeah, man. Like this is the stuff like I hang my hat on. Like I love real estate, and this is why I'm so heavily invested into REITs. It's because it's a space that I watch like very, very closely. And I mean, real estate is not sexy, right? There's nothing sexy about real estate. There's no fancy technology. There's no the barriers to entry are extremely high. There's not that many big players in a space. AI is not going to disrupt the real estate market, right? Like, again, it's so basic. They build buildings, they lease them out, they collect rent. Like, that's it. There's nothing super sexy about it. Probably the sexiest thing that I saw that was technology related was with one REIT called Invitation Homes. And they have like this really fancy like mobile app where people can put in their like requests. They can like check a bunch of things. Like there's this really fancy like application that they can use. But that was like probably the most technologically advanced REIT that I've seen, right? Like that was the most sexiest like technology REIT out there. I mean, there's data centers. Yeah, there's data centers out there, true. And the data centers, they obviously lease space for, servers and racks of servers. They'll lease them out to like the big tech companies, like Google, Amazon. There's probably Facebook. There's probably all these other like companies that need data like server space, right? So you have like you only have like 2 really big players in the space, and that's EQIX and DLR, Digital Realty Trust, Equinix and Digital Realty Trust. And those are probably the closest to tech stocks as you can get, especially with AI being so prevalent now. Like companies need rack space, they need data center space. So these two data centers have been doing really well, share price wise. But when you look under the hood, you know, DLR, I don't know. I don't know about DLR. Equinix definitely, but I don't know about DLR. But Equinix commands a very hefty premium. I think their share price is like above $400 or $500 at this point. Yeah, so like this is why I'm so like bullish on REITs, because I like REITs, man. Like I know the real estate space, and I follow it without like I follow it as much as possible. I see we have a bunch of new people joining. Is there any questions anyone has? Anything at all? So again, we covered dividend investing. So Eugene for Harmony says, as a matter of fact, there are not so much cover call ETFs, not able to recall based on the REIT market. I think Neos should. Yes, actually, yes. Neos just introduced a cover call REIT ETF, which I think is kind of the dumbest thing ever. But I wanted to take a look at it just to see it. But yeah, they did just introduce a cover call ETF, for REITs, which again, I don't know. That to me just makes no sense, because I mean, REITs, they're not really as volatile as tech stocks are, right? Or as momentum stocks might be. They're not as volatile. So I don't know. Maybe I got to read more into it. It did seem interesting. It did definitely seem interesting, and I think I don't know. There must be a market for it, because why would they spend all that time and money like coming up with that product? You know, there is a REIT ETF which I really liked if I wasn't investing in individual REITs, and I'd probably take a look at and consider. But that one is called REIT, RIET. It's from Hoya Capital. They own two ETFs. There's the HOMZ, HOMZ, which is home builders and things like that, and then they have the other ETF, which is like a monthly payer. So yeah, something at least to keep in the back pocket. I'm not saying go invest with them, go put your money into them, but yeah, definitely something to look at. All right, gentlemen, ladies and gentlemen, I'm not sure if we have any ladies in the audience, but we are running up on minute 58, and I want to keep this to at least an hour. So do I have any last second questions? Happy to entertain any questions. We talked about dividend investing, what makes sense. We talked about some pros, some cons. This live will be reposted as a video, so you guys can definitely check it out and kind of go through it again. But is there anything at all I can help anybody with? Or at least probably like give my perspective, give some points on. Yeah, yeah, Eugene. You hit the nail on the head. I mean, they're not volatile, so yeah, the yield would be kind of low. But they're probably making a lot of money off just the premiums. But like I said, I don't know. When I saw that, I was like, I just thought that was dumb. That's like writing cover calls against bonds. like, like why would you do a cover call ETF against bonds, right? I mean, REITs are typically known as like the bond replacement because they're not so volatile. But I don't know. Maybe they are. Maybe something happened when I wasn't looking. All right. Well, guys, I think that'll do it for me. I appreciate you guys coming in and watching. And again, this video will be reposted for you guys who may have missed a chunk of it. So I will have all of that uploaded here in a moment. I appreciate you guys coming in, saying hi, and posting some questions. Again, I do this for you guys. I enjoy talking to everybody. I enjoy connecting with other investors. And we can all collectively share our knowledge, right? That's why, that's what this should be about. We should all be able to learn and grow together. So, all right, with that, guys, you guys have a great night. I'm going to have a great day because it's morning over here in Southeast Asia. And with that, I will see you guys in the next video. Take care.